Vinod sir, can we?
Please, sir.
We are ready.
Thank you. Yeah. Good afternoon, members. Welcome to webinar on company audits 2021, small and medium enterprises. On the screen, myself, Irene, chairman of Thrissur branch, chairman of Kottayam branch, CA Prashant Srinivas, chairman of Palakkad branch, CA Vinod V. Menon, and our speaker of the day, CA SRIPRIYA KUMAR. See, we have conducted 1 or 2 seminars on company audits, but it's all in a macro level. So we thought of doing it for a small and medium enterprises and explaining the audit report format and how what are the changes it is happening for the current year and how it is going to affect next year. So when we had a discussion with madam, she agreed to give in detail all this information and give us a template and how to prepare all those things. She's ready to explain. So that's why we have. Thank you, ma'am. Thank you for this and accepting our invitation. Now we are moving to our today's this one. Let me call upon CA Prashant Srinivasan, chairman of Kottayam branch, for welcome address. Over to you, sir.
Thank you, Aryan sir. Chairman of Thrissur branch, CA Aryan KK, CA Vinod Menon, chairman of Palakkad branch, and my friend Priya, as I call her, SRIPRIYA KUMAR, our former Central Council member, who is the erudite speaker on the subject. I am stepping into my duty of welcoming Priya to our meeting. I'm very happy that Priya has consented to be a speaker of today's seminar, and very confident that Priya will do justice to the role she has taken up, and she has always done that. And I welcome Priya wholeheartedly to this webinar. I welcome all the MC members of all the 3 branches, the senior members of all the 3 branches, and my dear fellow members for the program. I hand over the proceedings to the speaker. Thank you.
Thank you, sir. Now, for introducing the speaker, let me call upon CA Vinod V. Menon, chairman of Palakkad branch. Over to you, sir.
Thank you, Aryan sir. It's indeed a privilege, and I'm really honored because SRIPRIYA ma'am doesn't require any kind of introduction, but it's really an honor and privilege that I have to introduce you, ma'am. Thank you very much, Aryan sir, for giving that privilege. We all know that SRIPRIYA KUMAR, our today's session speaker, he's a practicing chartered accountant by profession and managing partner of SPR and Company and Co. Chartered Accountants. And she was elected member of Central Council of Institute of Chartered Accountants India, also a registered insolvency professional. When we talk about the educational and academic honors, she is a graduate in commerce and completed her articleship from PricewaterhouseCoopers, Chennai, and well versed in contemporary technologies and systems. When we talk about the experience, an alumnus of Pricewaterhouse and Ford India Limited, she is presently the managing partner of SPR and Co., a new generation CA practice that serves reputed clientele largely in risk, IT consulting, corporate laws, and foreign trade advisory domains, endeavors into exercise original truth that put client need first. Priya has actively involved in training the areas of financial reporting, audit, and compliances, and address forums of chartered accountants, industry, and bodies such as CII, NASCOM, as well as staff training college of Office of C&AG. Addressed over 200 sessions at ICA and platform elsewhere. Passionate about information technology and training initiatives, and had helped launch the ICAI learning management system for emerging insolvency professions in India, which has a record of 8,000 plus users, over 140,000 tests taken to date. So she has served as a board of on the boards of companies of reputed groups such as Repco and Indian Bank, and also nominate director of ICA in the Accounting Research Foundation, HPRL Limited. She has been involved in execution of R&D projects for government-owned enterprises such as Railways, Indian Railways, Tamil Nadu Civil Supplies Corporation. When we talk about a small and medium support initiative, she administers a first of its kind knowledge sharing initiative. And the Smart CA, where the firm supports professional endeavors of small and medium practitioner profession in form of ready-to-use knowledge repositories and practice kits with overall reach of about 10,000 CAs across the country. She was a member of SIRC for the term 2013-16, a member of Central Council for the term 2016-19, and a fourth lady member to occupy this position in 70 years of history of the Institute of Chartered Accountants of India. Served on the following committees: executive committees and managing committees, examination committees, corporate law committee, convener on insolvency code group, expert advisory committee, FRRB, and the chairman of the CPE committee. When we talk about, as we have before starting our meeting, we discussed about COVID-19 initiatives, and from the way ma'am spoke about that, we could really understand the COVID-19 initiatives. She had aggregated over 140 CAs across India to render COVID-related support under a banner called CA Assist COVID-19, which is helping the government of Tamil Nadu to update the COVID bed status. Additionally, the team sponsored in part and enabled the coordination of 35,000 meals during the lockdown to hospitals and needy public in Chennai and Chengalpet. A avid reader, traveler, blogger, Indian mythology, and a soft skills training. With this, proud to introduce SRIPRIYA ma'am to this August gathering.
Thank you. Thank you very, very much for this very generous and long introduction. So, to Chairman of the Thrissur branch, Aryan sir, namaskar. To Prashant, who's an old friend whom I keep seeing on Facebook all the time. We're there. It's always like I'm in touch with him all the time. And of course, a very young and a dynamic chairman I can see in Vinoj of the Palakkad branch. I'm very, very privileged and very humbled to have been invited to this session today. So without much ado, and it's very, very nice to see the amount of work that the ICAI branch chairman do on COVID. I mean, just before the session started, the amount of passion which, whether it's Aryan sir or Vinod or Prashant, coming up on matters of health interest of our members, it's very nice. And I must also place on record a few chartered accountants from Kerala who are helping us with the project. So we are doing a project for the Tamil Nadu government where they said, can you help us to update the bed status? So I had put on a lot of WhatsApp groups saying anybody who can speak Tamil is welcome. There are very many chartered accountants who are basically Malayalam mother tongue. In fact, people from Cochin, etc., who volunteered us and helped us to do this project. And today is our 76th day, and we're about 130 chartered accountants who've been helping the government on this. So thank you very, very much. If any of you is there in this program, also a personal thanks. It opened our eyes to two big things. One is I think we should all be lucky for where we are today. That's the biggest lesson COVID taught us. And two, I think for all of us in ICAI, I realized that today your influence matters more than the power that you carry. All the branch chairmen, all of us, we're not MLAs, MPs, nothing big, but the amount of contribution ICAI has been able to do has been phenomenal, and I think we should just keep up this good work. So in terms of what are we going to present today, I'm going to talk about statutory audits. Now, are we going to talk about statutory audits generally? No, we're going to talk about specifically statutory audits of small and medium enterprises. So I have a pretty long 3-hour session. So I'll be very happy to take questions for about 2 hours, 30 minutes. I'll speak for about 2 hours, 30 minutes. And then maybe I'll have a question answer session for half an hour. Whatever I'm able to convey in those sessions, I will. If you have any specific doubts or you need something specific, which I've already done before, I'll be very happy to share it with you. So today, how are we going to structure this presentation? We're going to do it in 4 parts. First is a very brief introduction to statutory audit, and I will show you some Excel templates I have built. I have built audit working papers for all the components of the balance sheet and the P&L. So they are very simple Excel templates which you can yourself read and understand, but I will try and walk you through those templates. The second thing that we'll talk about is some specific matters of emphasis that I think we should be careful in the future on specifically statutory audits. They are matters of what I call our emphasis, not to be confused with matters of emphasis in audit reports, but generally what we need to know. Now, the third thing I'm going to focus on is Many of us think, oh, I'm auditing only a small company. 10 crore asset, 10 crore liability. There is only one loan that somebody has got and one loan that somebody has given. Something what I call as a largely dormant company. I think we need to be especially careful, especially in districts and parts of the country where you get foreign funds also. And maybe Kerala is one of them. So there is an additional safeguard on these kind of companies. And overall, today as auditor, you also need to be careful about fraud risks in financial statements. So I'm going to show you a presentation where I can just maybe open our minds to some amount of whether you're smelling of fraud or not, which is what I call as the sixth sense. So you have 5 senses. This is the sixth sense. If something is there about the balance sheet, can I wake up? And at the last part of the presentation, see, as statutory auditors, technically we are not expected to prepare the Schedule 3 financials. So let me start with that. So if your client wants somebody to do the Schedule 3 financials, please show them to some other chartered accountant who can help them. But I have, for the purpose of our own utilization, finally the Schedule 3 we are only signing. I would rather call this as a template for our guidance on how you can advise, teach your client how to prepare a Schedule 3 statement. So whichever way it is, you can either prepare, but that's a slight gray area, which is why I'm not saying it. But I have prepared a simple Schedule 3 financials with just a small illustration on what is the logic you will use to prepare financials in Schedule 3 using only 3 Excel formulae. And maybe as a follow-up, the chairman can in fact conduct one more Excel program if members want any more guidance on this. So this is going to be the pattern of my presentation today, and I'll be sharing everything with you at the end of the program. So I start with what I call as 001, which is my company audits overview. So when you're reading this presentation later also, you will be going through this in the same format. So I'm going to now share my screen. And if in the middle I forget to share my screen, somebody may please remind me that I'm talking without the screen.
Sure, ma'am.
So welcome to this exposition on statutory audits, primarily for small and medium companies, along with detailed checklists, a Schedule 3 template, and fraud risk assessments in financial statements. So we're going to talk about the audit process, fraud risks in statutory audits, designing and implementing checklists. I have done checklists which are 70% complete. All you need to do is see if something is unique to your client, add it in. If it's not relevant to your client, delete it and proceed. And I may not have the time for this, but the institute also has given a standard on auditing checklist. So what I will do is I've anyway been wanting to do it. I will download it, go through it, and it's again a very large checklist. So maybe we can summarize it and I can come up and send the chairman something on essays also, because the AS is something that we are reasonably familiar with. Now, how do we go about it? So what is statutory audit? It's very simple. It's an expression of opinion on the financial statements of an entity to confirm whether it is true and fair. That's all. So in this context, I think it's extremely important to appreciate what true and fair is. Now, I'm sure there are many young members also attending, so I'm going to try and make this somewhere moderate level. It's not very low, it's not very high. But true and fair essentially means only 2 things. One, my financial statements that I'm signing are free from material misstatements. The second thing is the financial statements have been drawn in accordance with an applicable reporting framework, which in our case of companies is the Schedule 3 framework. Now, please remember there have been changes to Schedule 3, but they are applicable only next year. So for this year, we follow the old Schedule 3 only. Secondly, there are changes to CARO. Again, it is not for this year. It's maybe only for next year. As of now, it's for next year. But again, due to COVID, it may even get deferred. One doesn't know. Similarly, there were changes to the accounts rules. There is a partial interpretation that some of the accounts rules might apply this year. But there seems to be a larger call where everybody says you can push everything to next year. So if at the end of it, I have the time, I can walk you through those changes in the rules, but they are largely for the next year. Now, what happens? First of all, a client gives you a financial statement. Now, a financial statement, a client tells you, these are my assertions. Now, what's an assertion? So let's assume you're the father of the groom and you say, okay, my son is 6 feet 2 inches tall. He's either a teetotaler or not a teetotaler. He's working here. This is his salary. He's good conduct. He's soft spoken and everything that the boy is expected to be. So these are assertions that the parent makes. Similarly, the management, when they give you a financial statement, are making certain assertions. Now, why am I specifically talking about assertions? Because you will find in my audit program checklist, I have linked it to the assertions. Now, you may ask me, ma'am, this is all common sense. Why do we need to do this? Now, the key reason why you need to do this is because this is what the essay expects you to do. And fortunately or unfortunately, you have to abide by your standards on auditing. There has to be a method, a process which is adopted in audit. That helps you to mitigate your audit risk. So what are the assertions? So for example, the management says, my fixed assets is 10 crore 32 lakhs. What are they saying about the fixed assets? They are saying existence. Yes, auditor, this asset exists. They are talking about rights and obligations. They are saying, yes, the asset exists. For this plant and machinery, all the invoice was in the name of the company. So that's an assertion on fixed assets. It's valued at so much. For a purchase transaction, there is occurrence. They say completeness is for everything. All my assets, liabilities, incomes, expenses are completely stated. They are accurately stated. Cutoff, very important, because you're reporting on financial statements of a particular period. So if your client has sold, but he has not dispatched, the sale is not complete. So you have a cutoff problem. So classification. Classification is your presentations and disclosures. You say, I have classified all my account statements properly in accordance with what? In accordance with the Schedule 3 reporting framework. So assertions will cover transactions and events. They will cover presentation and disclosure. They say account balances asset period end. So here's the father of the groom who says, okay, everything is good and hunky-dory about my son. Now, what does the father of the bride do? He verifies all this. Virtually, he does an audit. And that's exactly what we do as an auditor. The assertion of 6.2 is confirmed by looking at the boy. The assertion of existence by an auditor of a fixed asset is confirmed by doing a physical verification of the fixed asset, by reviewing the fixed assets reports, etc. More later. Now, you got your assertions. Next is you perform procedures. Again, why have you given 3 boxes? Why has Priya given 3 boxes? Compliance procedures, risk assessment procedures, and substantive procedures. Very simply, this is exactly what the standard wants you to do. It wants you to do risk assessment procedures, which are at a slightly higher level. It wants you, for example, tone at the top, integrity of the management. How many directors changed this year? How many CFOs changed? Does my client even have proper chartered accountant for being a 20-30 crore company? These are high-level risk assessment procedures. Compliance procedures are procedures which are tests of controls. So they say, okay, for every purchase, we have a purchase order, we receive the material, we make the payment. So you go through the entire sequence for 30 transactions. First of all, did I need that material? Did I raise a purchase order? Did I get a competitive quote? Did the material come? Did I record the liability? Did I record the liability correctly? Did I pay for it correctly? So these are the statutory audit procedures in relation to compliance procedures. Then you come to substantive procedures. There are only 2 substantive procedures. One is analytical review procedures. See, audit is always done top down. So whenever you are going to do an audit, you must ideally insist on a Schedule 3 balance sheet, but that if your client can't give, at least start from the trial balance. That's very, very important. Substantive procedures. So how do I do an audit? Do I first go ask for a voucher? Do I ask for the cash book? No. I always do audit top down. So I have this year's trial balance, I have last year's trial balance. I will do just a quick analytical review. Fixed assets last year, this year. Inventory last year, this year. Sales last year, this year. So those are substantive procedures. The first is analytical review procedures. The second is the actual tests of transactions. So you tell your article assistant, you do bank vouching. What is bank vouching? One of the most important parts of bank vouching is you trace the entries in your bank book to your bank statement. Now, I have found I'll talk to you on this when I'm talking about the fraud segment. One comes across cases where in the bank book they would have passed an entry XYZ Limited to bank from the working capital account. So we'll think, oh, in tally he has paid the supplier only. Very good, no problem. But when you do a bank vouching and you see in the bank statement, the amount would have gone to Mrs. Director. That's a case of siphoning. Today, as an auditor, you are battling a huge crisis of perception. So it's very, very important to be a little careful. Now, everybody keeps talking about this artificial intelligence, this, that. No. I think all of us need to go back to our first principles of auditing, which is to trust but verify. Secondly, think that you're the owner of the company which you're auditing, and think that there could be a siphoning or whatever. How would you do it if it was your own money? That's the way you would audit a company. That's the best way to audit. So these are the two substantive procedures. Now, what do I do? For example, client says, as per tally, my fixed asset balance is 10 crore 32 lakhs. I take my fixed assets register. The total of my fixed asset register must be equal to tally. This general ledger, sub-ledger tally is a substantive procedure. These procedures, why do you perform? Because I need to get audit evidence. Otherwise, what are the other procedures? So again, today, your working papers must demonstrate that you have performed these procedures. Analytical reviews, observation. You observe the physical inventory being counted. Enquiry. You can call a supplier and check out. Is the supplier really there? That's an enquiry. We do lesser enquiry procedures. Your 143.1 enquiries, right? Whether where shares are stated to have been allotted for cash, have they been actually cash being received by the company? Are there any transactions of a personal nature? These are enquiries. Your 143.1 are enquiries. A good part of your CARO are enquiries. Confirmation. This is one of the most important steps to perform in an audit. And see, the best part today, or the not so good part today, is we don't bill. As small and medium practitioners, we don't bill by time. The client says, okay, for this statutory audit, I will pay you 75,000, 1 lakh fee. So I have to do a very effective and efficient audit within that period of time, which is where confirmation is a very, very superior procedure. See, for everything in the balance sheet that relates to debtors and creditors, sales and purchases, and bank balance, confirmation, even loans and advances, share capital, investments, everything you can follow confirmation. Why? Because when you get a confirmation, your audit evidence is external. So it's a very, very, very superior form of confirmation, a superior form of an audit procedure. Now, Institute has confirmation standards on auditing. Kindly write to the bank. Again, when you write to the bank, you don't say, my balance with you is 5 crore 32 lakhs or 50 lakh 32,000. You fill up you just give them blank forms and ask them to confirm everything. Reperformance recomputation. Sometimes, most of the times, our clients maintain their fixed assets registers in Excel. So what do? Your client says, this is the depreciation. You can also, for a couple of items, see if the same depreciation is coming. Now, in the templates that I'm sharing with you, I have prepared a detailed asset depreciation calculator. Now, if you're able to understand this template, you can also use this to create a very same fixed asset register for your client. You can't do it as the statutory auditor, but you can advise your client or you can do it for other engagements. Many companies have not moved into the New Companies Act for computation of depreciation, etc. Kindly take care. Inspection. Inspection is your inspection of securities, inspection of your investments, etc. Again, please take care to ensure that any or all of the combination of these procedures should form part of your working papers. So what I've basically done is I've taken the standards on auditing and whatever I think was the most relevant, I have put it into these Excel templates so that it can guide us. Now, we spoke about audit evidence. Why do I need audit evidence? I keep saying this in most forums. See, today there are two concepts: diligence, negligence. It's like a simple coin. One side is diligence, one side is negligence. That rim is your working paper. It decides which side the coin will tilt and fall, which is why you must have documented working papers. In fact, the standard on documentation says an auditor has to get his working papers ready within 60 days of completion of the audit, which is very good time for us to finish the audit and document the working paper. Now, obviously, auditor obtained is better than client provided, written is better than verbal, external is better than internal. But at the end of it all, you might ask me, what's the big deal, Madam Priya? It's all persuasive, right? Our standard clearly recognizes that audit evidence is persuasive rather than conclusive. But we audit under GAAP, the generally accepted auditing principles. They allow you the benefit of sampling. So I have checked 10 fixed assets. Everything was fine. I have no reason to believe or to do more work to disprove something. Now, very interestingly, why has this entire focus and debate and dialogue and discourse on audit suddenly become very prominent? I'll again touch upon this when I'm coming to this fraud risk. But today, what's actually happening is, see, there is a logical pecking order. See, if a company fails, you first ask the directors, then you ask the KMP, then you ask the operating management, then you ask the credit rating agencies, you ask the bankers. Now, nobody seems to want to ask any of these people. You just turn around and say, what was the auditor doing? It's a huge issue that we are facing today. But today, let me also step one back. This has now become by convention. See, how do you explain to a regulator that when we were created 70 years ago, we were created for a particular template of activity? Today, what is happening? Perception seems to be defining the law than the law or practice itself. Today, two partners have a fight, you write to the institute. How fair is that? And again, when the institute examines something, they say, no, we will look at merit. So this is the landscape. Now, the second important thing is today, many companies are failing. And this year, I'm very enthusiastic about doing this presentation because we have a very challenged environment. We have an environment where a fraud is likely to happen. Why? There is something called as a fraud triangle. That is opportunities, pressures, and threats. This year is a year filled with pressures and threats. If your client does not show higher stock, although such stock may not exist, he will not get his working capital limit renewed. It's going to be a problem. So the threat and the pressure to do it is much higher. That's point number one. Point number two is perception of an auditor has changed. See, just because somebody's perception is there, am I going to do 300% work? No. I'm only going to document my work better because I am more comfortable today. And third is, I think we need to appreciate that we don't have the concept of a public interest entity in India, which is not clearly defined. See, today we apply accounting standards, ENMAS standard. In fact, you must have standards on auditing for small and medium enterprises. Today, another very interesting thing I want to tell you is, look at the NAFRA report on the large firms. It's very scary because a standard on auditing in several parts, when you read the standard, it says it's more like a guideline. It's a standard. It is not law. So if somebody is reading the standard on auditing line by line and reading it like the way he would read section 185 of the Companies Act, then it is not at all sustainable. But yesterday in another forum, they were discussing at the rate at which it is going, they are saying in their audit documentation itself, you must add one more column saying what is the standard paragraph that you have complied. In fact, one of the things that I would like to go back and tell the institute is, if this is the way standards on auditing are going to be interpreted, then we better reduce the standards on auditing to a couple of pages so that we will all be able to comply, because in its current form, it will be very difficult to comply. So these are some of the factors, which is why you need to build a good audit evidence. Now, all of us are used to functioning in a particular manner. I just want to tweak the style of functioning a little bit. I want to say, please have a checklist. For everything, you have a checklist, because number one is diligence. If you are following a checklist, everybody thinks, oh, this firm is a good firm, they're having some checklist. But it's also very important, when somebody wants to review your work, you say, see, this is the checklist. Fine, I may have made a mistake, but I'm not negligent. I think it's very important. Why checklists and audit programs? It helps you to do an efficient audit. What's an efficient audit? It's intermixed here. An audit you can finish on time. Why? Because your fee is limited. Let's face it, you can't endlessly do an audit. 2, an effective audit. What is an effective audit? I get sufficient, appropriate, relevant audit evidence. I'll give you a small example. Sales of your client is, let's say, 3 crores. One way to audit sales is to take all the invoices, tick, 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 everything, see the lorry dispatch, say, okay. Let's say your client is on Tally. And in my view, Tally has no internal control. Because you can add, delete, remove, voucher, do anything you want. So which means you will be doing at least 50-60% audit. Now that is going to take me 3-4 days, 5 days. Instead, I have sales of, let's say, 3 crores. I have receivables of, let's say, 1.5 crores. If my 1.5 crores are not related parties, I should try and get a confirmation of balance. It's a very, very powerful test. Even more powerful test, how much bank money has come in during the year itself. And there is something called as a test of subsequent realization. See, beyond all these checklists and the way you do the audit, the biggest advantage SMPs have in the statutory audit is that we all sign generally in August, September. So if the client says, I have 2 crores of receivables in March, logically by September, the money should have come. So that test of subsequent realization is very important. So you need to perform an efficient audit. So you will primarily go take only those audit steps which will help me. See, if I showed a receivable in the balance sheet, what is the best test? That I have collected the money later. I finished that test, period, gone, finished. I'm very happy. I won't do anything beyond that in sales. Complex requirement. See, today you have to remember so many things when you're doing this audit. It's not practically possible. You need to standardize work. So you have to manage by exception. So today, you can't see, and one of the biggest advantages of having a checklist is, normally, when you do the current year audit, you will go through the previous year checklist and take it from there. It's called a roll forward. You just roll over the client and then you carry it forward. It helps you to standardize work in a big way. So in the firm where I did my articles, it was very clear. First year articles will do cash and bank, loans and advances, fixed assets, if there are no big capitalization. Second year articles will do liabilities. Third year articles will do inventories, contingent liabilities. It helps you to standardize work. And so your second year article will train your first year article. You can sort of move it. The another very important thing is, it's called CAKE, cumulative audit knowledge. See, how much can we as partners or proprietors remember? Something should be there for our article assistants or for our staff to take forward and run. It helps you to build cumulative, a cake on your audit. You can delegate work. You can place some reliance on staff. See, again, I'm not saying the checklists that I've done are 100%, but I think they are a good 70%. So it's a good start point. And I'm sure For example, I have very little exposure to income tax. So if you see my checklist, I wouldn't have done much on income tax. But if you feel you want to put in something good on income tax, please do put it. I have basically gone very contextually, check if all the deductions are there, this is there, complete it. So this is why you need to have checklists in programs. Now, what are the checklists I am giving you? So before we actually start doing an audit, I think you should go to the essay checklist. See, don't even read the essay. I will send this to you. It's available. It was an institute publication. It was a standard on auditing checklist. You quickly go through the checklist. Easily, you'll be able to figure out which are the most important aspects I need to cover. We can't cover that checklist fully in its entirety. It will be very difficult. But when you're doing this, please read something called SQC1. That is your first foremost standard. Just start trying to read that. It'll talk about acceptance, continuance, audit planning, firm's capability, etc., which are very, very important. I have now given 2 types of checklists: client acceptance, continuance, and audit planning. Then I have done detailed checklists on assets, liabilities, income, and expense, which are audit programs. I will be sharing a standard on auditing checklist and a schedule 3, which I have put in a very sort of layman manner. I've not given it like a checklist, because schedule 3 by itself, if you download it from MCA, it looks like a checklist only, right? So this is, and Companies Act, I can share progressively. I have to just tweak it a bit, but yeah, this is what it is. Now, before I show the checklist, this is what it does. It's linked to assertions. It is even before you're accepting the client up to completion, I have done a checklist. It's modular. You can add a line, you can delete a line, you can add programs, you can delete programs. Now, I find that our articles, especially the millennial kids compared to us, are really, really smart. Some of them may actually be able to convert it into a software also. If you want, please do. And in fact, if any of you is planning to automate any of this, I can even add other inputs. And in each checklist, I have kept one column: done by, reviewed by. Now, again, Priya, why do you do all this? Because the essay wants you to do all this. Tomorrow, if there is a query, you must just be able to give this bunch to somebody and say, this is the audit I have done. And these are very relevant not only for statutory audits, but for statutory audits, internal audits, concurrent audits, whatever you do, it's nice to have a checklist. Now, with this, let's see the Excel file attached. But before I do this, let me just take you to some matters of emphasis before you do your statutory audits this year. Number 1, qualification and disqualification. Now, I'm told the institute receives, see, if 2 parties have a fight, the easiest, softest target is an auditor. And I must say with all my conviction that wherever I have seen issues happening with auditors, and I'm very proud to say this, it has never been an issue of integrity. It has just been an issue of, being a little relaxed. So please don't be relaxed, because they catch us on the smallest of things. It's better to be careful. I think as far as I know, compared to this entire ecosystem that I am seeing, and I've seen more particularly in this IBC, my own respect for this profession has grown manifold. Whether it's to see a credit rating agency conduct, which has been much discussed in the context of DHFL, ILFS, etc., bankers, the huge write-offs, the IBC related issues. I'm very happy to let you know that I think we have delivered in some part, but obviously we need to deliver more. So qualifications and disqualifications, please be very, very careful. You should not be disqualified. Second is audit term and rotation. You've got the 5-year, 10 years. If you're a firm, please be a little careful about it. Please make sure that, one of your partners who's been signing the financial should not quit and join another firm. So take care about this part also. Is very, very important. The next one is what I want to really speak about: restricted services. So section 144 of the Companies Act says, if you're a statutory auditor, you shall not do accounting, internal audit, this, that, etc. Now, bookkeeping, accounting, Drawing up the financial statements of your client itself is a restricted service. So please be careful. See, again, one thing is to say, I will have to follow the book. The other thing is to say, okay, I'll be pragmatic and see how best I can avoid doing it. But please be a little careful in this restricted services, because again, you see many complaints. Again, two stray people have a fight, somebody writes saying auditor has done this. What will the auditor? We are also human. The next is engagement letter. The institute, this again I'll be covering in detail in my templates. Just close your eyes, download the institute engagement letter format, and please get it signed. If there's a retiring auditor, please complete that NOC formality, which I'm sure most of us are familiar with. If your client needs to have an internal audit as per section 138, he must have an internal audit. If he does not have an internal audit where he is mandated, forget the fact that there is a non-compliance with the law. For me, it is a red flag for a fraud. Similarly, KMPs, above 10 crores paid up share capital, the company should have a KMP. No problem. 2 directors are signing the financial statement. I'm happy in that level. CARO applicability. Check whether CARO applies to your client or it does not apply to your client. When in doubt, please do CARO. Of course, the CARO guidelines are very clear. I'm not going into it today, but it's very clear. No, it has a certain sequence of gating. So first is small company and then you come to private company, but don't take chances. IFC. Again, please be very careful. I have seen certain financial statement audit reports where auditors have failed to report on IFC. There's another very interesting thing about this IFC. It says IFC shall apply if these categories are satisfied. But it also says that if your client has not filed the returns under 92 or whatever is the Companies Act provision, then also IFC will apply. So please be a little careful on this. I can clarify this independently offline as well. Financial and accounting period. Most of us are absolutely convinced. If you have started a company on January 1, 2021, you don't need to close it in 21. You can close it in 22. Please be aware of the small company provisions. Small company exemptions should be given only to genuinely small companies. Private limited company exemptions, there are 2 exemption notifications, 15, 70. Why am I saying all this? A lot of this is not relevant for statutory audit, but just keep your mind's eye open to some of this. Cash flow statement, wherever it is relevant, it has to be prepared, it has to be attached, it has to be certified. Share application money, please be a little careful because it can become a deposit. Depreciation, please be very careful. Ensure that it is computed only as per Schedule 2. Ensure that your client has come in line. A lot of the small companies, they don't tend to do it. We are also slightly relaxed, but tomorrow when there is a review, this is your responsibility, unfortunately, because it is a relevant, it's a legal pronouncement and it's the framework. Please be very careful about deferred taxation. When we talk about deferred taxation, I will talk separately on this. I have a very layman's view on deferred taxation, which I'll be very happy to share with you today. It will tell you exactly what you need to appreciate about deferred taxation. I'm sure most of you would know it, but for the benefit of the others, I'd like to share it. Be careful about loans from directors, loans from directors' relatives. Why am I saying all this? I'm saying all this in the context of a deposit. So certain transactions become deposits under the Companies Act. And if they become deposit, your client ought to have a credit rating, deposit insurance, etc. And section 73 may have to be complied with. Similarly, loans from members. Loans to directors, please read section 185 very carefully. No company shall give a loan to a director or his relative, but to entities, to persons in which other persons other than these people, you can give a loan provided it is for principal business purpose and there is a special resolution. Please go through this carefully. There is one more reason why I'm highlighting these specifically now. Similarly, trade advances received can become deposits. Please be careful. It has to be refunded within 365 days or adjusted within 365 days. These are a bit scary. Don't go out of the way to protect a client. Not worth it. Kindly ensure that the audit report format is in the relevant format only as prescribed in your section 700 series. Fraud reporting, if there is a fraud that you've come across, fraud reporting is mandatory under 143.12. Management representation letter, very, very important. Two things: engagement letter, management representation letter. Management representation letter is the letter where he tells you everything is properly stated. He is giving you a letter to that effect. Wherever you have doubtful items which we are relying on representation, you should put it inside, especially things like litigation. See, today I found one thing very scary. A lot of companies, the litigation, the management is not disclosing to the auditor. What do I do in these times? You must utilize the public search engines which are available. I have found this to be very effective. There are public search engines like Zauba, Insta Financial, Tofler, Probe. Many of these players offer for a small fee a complete report on the company that you're auditing. It gives the ratios, it even gives some insolvency ratios, it gives you whether it's a willful defaulter or not, it gives you all the litigation against the company. It doesn't cost much, and in any case, it's going to be debited back to the client because this is an out-of-pocket expense we are incurring. These kind of reports, there will be one separate sheet called litigation. It will tell you which is the forum, who is the petitioner, who is the defendant, what is the case all about, which section it has been filed under which act, and what is the present status of the case. Is it closed or is it pending? And it will give you the next hearing date. In my opinion, some of these reports tend to throw out false positive. So for example, I had a client called ABC. ABC was a partnership firm. When I downloaded that for ABC, it gave me so much because that particular report confused this ABC with an ABC company. But I still said it's okay, no problem. At least I'm only eliminating. It's not got anything to do with me. Please use these public search engines to actually get data on the client you're auditing. Another very important thing I want to insist on is your director's disqualification. I have come across a couple of financial statements where the auditors have said, based on representation received, none of the directors is disqualified. But you go to the MCA website and see the director is disqualified. He's featuring on the list of disqualified directors. Now, what is the thing to be scared about? If he's disqualified, he can't even sign. And based on his signature, we as auditors have signed. So just be a little careful. So even if you don't get a certificate, or you have to get the certificate anyway because that's what the report says, you should go and check independently with MCA whether the director is disqualified or not. This year, please be very careful about going concern reporting. If you think all this COVID pressures have caused a material scale down, please state so. Similarly, SAS Schedule 3 compliances, Companies Amendment Act, whatever the changes, kindly go through. Now, this is actually part 2 of my presentation where I just wanted to open your eyes to what are the most important things. Engagement letter, management representation letter, audit report format, Schedule 3 format, no violation. Just ensure that whatever is required has to be there. Take charge of going concern this particular year. I think these are deposits. Please pay a lot of attention. Bank defaults. Please pay a lot of attention this year. I think these are the specific matters. Similarly, when you want to go to audit qualifications, please be bold and qualified. See, because one thing I've noticed is we tend to take very soft positions with our clients. See, I'm not telling to be adversarial, but My point is, if you don't qualify this year and it results in a problem next year, they're also going to come back to you and ask you why you didn't qualify. Now, we go to part C of my presentation, which is on fraud risk safeguards. But before we go to fraud risk safeguards, let me show you the checklists. So, would somebody like does somebody want to take ask a question or something at this stage, or should I continue, Chairman sir?
Yeah, it's up to ma'am. If you allow, we can tell that anybody want, they can. It's up to you.
Yeah, or ultimately maybe some of the answers they may get in the course of the presentation.
Yes,
so
yes.
we do it at the end.
Yeah, I'll request that one. Anybody can.
Sure, sure.
Dear ma'am, yeah, you may continue, ma'am, please. Yeah.
Now I'm going to walk you through some checklists. Right? I may have missed out some procedures. If I feel, for example, I've missed out anything, I will add it as we are speaking. I'm just increasing my screen size. This is how a checklist index looks. This should be the top of, so it says XYZ Limited. Client name, XYZ and Co. And your client's name, you start off. Now, as in you finish your checklist, you keep saying done, 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 done. What are the checklists that I'm going to talk about? We are actually at 4 o'clock, so I have another 2 hours more. So I'm going to take about only half an hour on these checklists. I'm going to show it to you because it's predominantly everything that we understand. So I don't want to run through the index fully, but this is how it is there. Acceptance and continuance related. Engagement documentation. You have taken over as the auditor. Engagement letter should be there. What else should be there? Understanding of the client's business and risk assessment. Why do I need to do this? Because I have a standard on auditing that tells me to do this. Audit planning. Then I have prepared a component-wise audit program. Fixed assets, investments, inventories, revenues and receivables, cash and bank, loans and advances, miscellaneous expenditure. What is the, are you able to notice? It is exactly the way we present our assets and liabilities in a horizontal format. You remember? So the most permanent asset will be on the top and the least permanent asset will be down. So in that sense, it's actually fixed assets, investments, inventories, revenues, receivables, loans and advances, cash and bank. Then we will have audit plans for liabilities, which I have prepared, share capital, reserves and surplus, secured loan, unsecured loan, current liabilities, provision for taxation. I'm not an expert on taxation. I put together something. Similarly, key expenses, payroll. Everywhere payroll will be big. Electricity, rent and other monthly expenses, other major expenses and miscellaneous expenses. TDS, GST checklist I have not kept, but you can have a very simple checklist. So what would be my GST checklist? We'll try and develop one as we go along. And these are not there here, but you as an auditor must get all this. The notice for the AGM, the board report, the auditor's report, balance sheet P&L, notes on accounts, cash flow. So this is how I will maintain a working paper index. So maybe I will have 12 bundles. If it's a small company, I will have one bundle for each, serial number 1 to 12. So let's assume it's a new client. This and the continuance checklist are more or less the same. So in each of these checklists, I've basically spoken about SQC, which is the reference also. Integrity of the client, team competence, ethical requirements are covered in SQC 1. So let me explain to you why. See, everybody keeps talking about KYC, right? Know your customer in a bank. Today, as an auditor, you must know your client. So understanding and appreciating an entity level risk for a client is also important. So your client has had multiple tax raids. See, it's your call whether you want to accept him as a client or not. But once you accept him, you just have to do more work with clients such as these. So tone at the top, integrity issues, litigation, violation, offenses. Review of the business and competitive environment. Why? If it's very competitive, then my client could overstate his sales. Policy changes. Review of financials. So this is a new client for me. So I will go to MCA, download his data, and I want to understand. You must also understand why he's changing the auditor. See, sometimes if some auditor is refusing to do him, you have to think to see sometimes very clearly when the work goes out of the big firm and comes to a mid-sized firm, it's very clearly a fee issue. Somebody says, look, I can't pay 5 lakhs, 10 lakhs and all, I can pay 3 lakhs for this audit. If you're a large firm and you're not able to do it at that price, we appreciate. But if there are other reasons for the resignation, please go through them carefully. In fact, there is a separate guidance now on resignations. The resignation guidance says you have to have a handshake between the previous going auditor and the coming auditor so that you understand the issues. Auditor independence assessment. So, see, independence again is a state of mind. But Companies Act very clearly says you can't hold shares, you can't be indebted to the company, etc., etc. Now, why is this? Okay, let's just step one back. Today we keep hearing this, right? Oh, this firm, very large firms, they also do this work, they also do that work. How can they do it? It's primarily because I don't think we respect the conceptual framework. Today, unless it is laid down like 185, we don't want to comply. So some of these firms, what they try and do is they try and use the nuances of the law. But very clearly, for you and for me, this is the framework. With a client, this is what ISBA says. The International Ethical Standards Board of IFAC says, you must not have these threats. If you have these threats, you are not independent. What are those threats? Self-interest threat. Example, I am a shareholder. I am the auditor. Will I write something negative about me? No. Self-review threat. I have only given one big tax opinion for that client and the client has followed that system. If I audit that particular client, will I say that opinion is wrong? That's self-review threat. Same reason why we don't do accounting. Because if I do accounting, will I ever go and say, no, this voucher was wrong, please correct it, pay more tax? No. Third is familiarity threat. You'll be very shocked. Before the rotation came, there are some very large companies in India which don't even know how long the same firm has been the auditor. I'm not saying whether it's good or bad. I'm not getting into it. But that is familiarity threat. For example, there's a particular auditor of a very large company in India. 35 years they were the auditors. So today they've brought in the system of rotation of either partner or even in your own firm, if you're not coming under the mandatory rotation also, try and rotate partners. It's a very good attribute. And in fact, in certain categories, it's even mandatory. So that is the third one, familiarity threat. Fourth one is advocacy. I am going and doing an advocacy for my client. I am saying, okay, I will represent to ministry. We will go do, your inverted duty structure, we can do something. I am taking positions on behalf of my client. And the last one is intimidation threat. If your client intimidates you and says, you better sign this, it's a threat to my independence, I have to resign. More often than never, people tend to, not go into this in great detail because, again, I feel today the problem is not us. The problem is the client. And that's also because, see, the Companies Act today, for all that it says, does not say that the CFO of a company with more than 30 crores turnover should be a chartered accountant. Who is a CFO today? Anybody. I have come across CFOs who don't even know that there is something called as an accounting standard. But yet he sits as the GM accounts in that company. How do I work with such clients? So, which is why you need to ensure that there is no threat to independence. Because tomorrow, if there is a problem, that's the first thing that comes. Past auditor communication, history of changes. I go to the MCA website and see every year the director is changing. I see namesake directors. Who's a director? It will be the promoter director's driver. Oh, it's very, very common and you'll be very surprised that it actually happens. So today when you're trying to sign financial statements, see who's signing it with you. Is it an educated director? have you met the director? Some of these things are becoming a little important. Which is why I keep saying, now your artificial intelligence will tell you, as per my checklist, 2 directors have to sign. Only my intuition will tell me who is that director, which is why I don't think you can ever replace the human mind in an audit. The next is continuance checklist. In continuance checklist, you have some advantages. You've already worked with that client before, but you still have to do a little bit of search to find out that you can maintain the same level of audit or you need to do more audit. Consent under section 139, whenever you're getting appointed, you give this consent letter that says I'm within the limits, which is what? Now today the limits are very, very, very high. So today you follow the institute limits more. The institute limits at 30. Whereas the Companies Act says 20 companies, but it does not include private limited companies up to 100 crores paid up share capital. So up to 100, so you follow the institute limits for your appointment. Engagement letter, I've given here itself, you can just go click. Engagement letter for audit of financial statements, where ICOFR is applicable, where ICOFR is not applicable. Just print, modify, sign, or modify, print, get your client to sign. If client says something, tell him this is my institute norm, you have to sign this. If you're the incoming auditor, please get an NOC from the earlier auditor. Very, very important. Next, again, why do I have this checklist? Because my standard tells me to do it. That's my standard answer for everything. This must form part of your working papers. So this is basically understanding of the client's business is fundamental to appreciating the risks. This also helps you to plan your audit, correct? What is the name? What is the constitution? Registered office, nature of business, branches. Don't think this is only a company's audit checklist. You can use it for everything. Ownership and governance. Who is the key shareholder? KMPs, directors, etc. Industry dynamics. Is it a seasonal industry? Suppose you're the statutory auditor of a notebook making company, school notebook making company. All their turnover will be there only in February, March, April, May, which is the school season, June. After that, they'll have very little work to do. So you must understand that in those companies, the sales will come only in those months. And it might have a very long collection cycle. The collection will come till October. Accounting system and internal controls. Now, imagine I am following these serial numbers. Okay. How will I document? This will be my top sheet, understanding the client's business. I will call this as 6.4. Why? Because this is 4 and this is serial number 6. Standard operating procedure. I don't want to take all my client SOPs and keep it with me by taking a printout. You might want to have a soft copy, but just have one sheet of paper. Let it be numbered as 6.41. Now in 6.41, which will be a separate work paper, you can even write by your hand. The page number is 6.41. You will say the company has standard operating procedures for the following areas. Fixed assets, this, but they don't have SOPs. Similarly, delegation of powers. You will have a small sheet of paper called 6.42, where you will write, okay, the company has a delegation of powers. This was approved in the board meeting held in 2017. We have got a copy of the DOA with us. And for 50 payments, we have ensured that the payment has happened as per the DOP, which is, for example, all my checks have to be signed by 2 signatories. For above 50 lakhs, one of the signatory has to be the GM Finance, whatever. IT environment. See, all this understanding also becomes important because you are the one who is certifying the ICOFR also. IT environment of the entity, please keep a small note, 6.43. Just say for accounting, I'm using this. For payroll, I'm using this software. So accounting, I'm using Tally. Payroll, I'm using Rely On. For GST, I've got some software. For fixed assets, I'm maintaining it in Excel. My production, my client has a homegrown ERP production system. So these are the things that you basically write down when you're talking about the IT environment in the entity. Similarly, financial reporting protocols. So how often does your client prepare financial statements? Management reporting protocols. Sometimes your client will be giving a management report every month to the board, etc. Take it and keep it. So if it is not applicable, don't say not applicable. Instead, you put 6.44 and say there is no specific thing. They prepare their financials only once in the year end. Otherwise, there is no thing. But the GM Finance reviews the TB every month. Similarly, management reporting protocol, just say there is no management reporting protocol in this company. So 5 pages which will get attached to this will form part of this deck. Similarly, key laws and regulations. We also have a standard on an audit called CLAR, compliance with laws and applicable laws and regulations. So what are all the laws? Now, why is law very important? It's important for 2 things, because of liabilities. See, otherwise he's complying, not complying, good he will comply. But I can have 2 big hits. One is liabilities and 2 is litigation, which is why you track what are all the compliances. Now, within this establishment related, Factories Act, this act, that act, labor laws, PF, ESI, payment of bonus, payment of gratuity, Minimum Wages Act, Forex related laws. Especially since I'm addressing Kerala members, please ensure that the FEMA compliances are maintained. In many cases, clients bring in money accidentally and they have not even reported. No FCGPR filing has been done, etc. Taxation laws, any other laws to which they are subject. Then, audit is all about misstatement, right? So you have to assess misstatement. Again, there is a standard. How do you have to ensure if there is any risk of material misstatement. See, some of this, when you go through and you fill up, somebody will actually know you've done a good job. That's the whole idea. Tone at the top. My client, 80% purchase from related party, 80% sales to related party. High risk of material mistake. Enron, that is what happened. Every company, most of the companies they sold to were related party companies, special purpose vehicles. No sale happened. Be careful. Adverse media reports. Adverse events. This year, what adverse event? This year itself has been an adverse year. Market related, personnel related, quality of people. Now, am I giving bonus based on revenue? In many companies, you will find that the promoter will not even know. He'll say, if you do sales, I'll give you commission. What should have the promoter given? He should have said, you should sell and collect, then I will give you commission to the sales manager, like a Del Crede. But he would have just given commission, that guy would have taken, and 1 year down the line, no recovery has happened. Internal controls, internal audit, very important to be assessed. Because until ICOFER came, in India, we were bothered only about output financial statements. Are my financial statements true and fair? But after SOX came in the US, we also came with ICOFER. It says input is there. There's a process, tally, accounting, voucher, approval level, delegation of authority. Then there is an output financial statement. They said, now I'm not, as the government, bothered only about your output. Please tell me your internal controls over financial reporting. Has that been functioning effectively? It's very important. Whistleblower fraud reporting protocols, any frauds discovered. Financial statement transactions. Do I have RPTs? Related party transactions, very important. Forex transactions, very important. Long-term purchase contracts, long-term sales contracts, sales commission contracts, management estimate, warranty provision, pending big litigation. One litigation sometimes can wipe off a company. Management awareness, banker cases. First question, please ask your client, has the banker filed any suit against you in DRT? NPAs. So based on a review, you determine the assessment of risk is high, medium or low, and then you customize your audit procedures. Now, you did a lot of work. You understood who your client was. Then your client, you've accepted, you've gone through whatever is the balance sheet, the P&L, internal audit report, accounting system, general controls, whistleblower issues, etc. Then you come to audit planning memorandum. But at this stage, I want to take a small detour. Now, I don't know how many of you have had an opportunity to look at the new Schedule 3 and the new CARO. Now, in Schedule 3, you obviously have to give previous year numbers. So somebody might ask you, why are you trying to do so much more audit this year? Because next year, when I'm doing my new Schedule 3, I have to give previous year corresponding numbers also. And the way they have done the Schedule 3 is, it has completely transformed this landscape of reporting. In my opinion, after the new Schedule 3 has come, it is no longer financial reporting, it is financial cum management reporting. Let me give you a few examples. In the new Schedule 3, they are asking about aging of capital work in progress, abandoned projects, time and cost overrun. Tell me, as a statutory auditor, where do I come into the picture of time and cost overrun? But since Schedule 3 today says it, I have to certify that amount also. There's been a huge, similarly, the new Schedule 3 wants the management to disclose in so many words if I have given loans without agreed positions of repayment, then I have to show how much of such loans I have given to KMP, related parties, directors, etc. Because of these additional disclosures that are coming next year, you have to be very careful about your loans to directors provisions, your deposits provisions, your impairments, etc. It's putting a lot of focus on this aspect. Yeah. So I think that the new Schedule 3 has completely changed this audit landscape. Now, another very interesting thing, I noticed this as a general trend. See, until this ILFS happened, auditor has had everything to do with solvency, correct? Balance sheet as at a particular date. Okay, so you got liabilities, you got assets. And if there was a threat to solvency, you would obviously say that there is an erosion, share capital gone, going concern, right? But after ILFS, suddenly an audit focus seems to have also gone into liquidity. Why? Because in my new CARO, I'm asked a question. Based on management representations, etc., estimates, short-term assets are enough to pay short-term liabilities. Very, very scary position. I am now taking a call and saying, yes, his inventory will become cash and this cash will be used to pay a creditor. His receivable will come in, it will then be used to pay somebody. I am writing there saying that my short-term assets are enough to pay my short-term liabilities. Again, another interesting change that it brings to the audit is you have to audit your bank statements and not your bank books in the future. Huge. Okay, let me give you another example. Your client does some evergreening and keeps on showing that your inventory is all new. He says, nothing is old, sir. Everything we produce, manufactured, turned around. See, however, with GST, it is a little difficult, but it still happens. Now, let's say your client keeps on saying, all my inventory is new. But you look at the bank statement, not even one supplier has been paid. It's obvious that that inventory cannot be new, correct? It has to be an old inventory, an aging inventory. That should highlight a red flag. Similarly, when you're reviewing the bank statement, of course, we spoke about, it slipped my mind. So this is the second important aspect is, next year onwards, you as the auditor in CARO also have to say that whatever returns have been filed with the bank, which is my stock and book debt statements, etc., they are matching with the books of accounts. So just see how well the government has caught everything. They have said, first of all, you need to have audit trail. If you don't have audit trail, auditor, please qualify. In fact, one of my own slightly critical observations on this was Even as an organization, we kept saying tally, tally, tally. But the point is tally just does not meet ICOFER. So it's a very double-edged sword now. So, but as an auditor, although tally perhaps does not meet ICOFER, I would have performed additional procedures to ensure that my internal controls over financial reporting are working. So this is the second point. So you as an auditor will shortly have to start corroborating with a lot of these side evidences. Next year, you're required to say in so many words whether your client stock and book debt report is equal to the amount stated in tally. And they can't pass vouchers, etc., randomly. Then, so audit planning memorandum basically tells you who are you going to engage, how many days, so what all do you need to do? Now, of course, there may be no GST, statutory audit, or is it a limited review, tax audit, transfer pricing, special certifications. Your client has imported some machinery, you have to give an EPCG certificate. You will give it as well along with the statutory audit. Or your client has some DPT4, deposit certification, etc. All that will come here. So you just note down so that you know what is the total work to be done. Similarly, entity, parent, subsidiaries, associates, entities abroad. Take care. Now, this is something I would do. I will take my last year number, this year number, and see the variance first. If there's not much variance, then I can perform slightly lesser audit procedures, but more the variance, more the audit procedure. Now, in this context, what is an audit risk? Audit risk is the risk that the auditor fails to detect a material misstatement. That's all. I'll try and give you an example. Let's say there is cash. According to me, my cash inherent risk is 1. Highest possible level of risk. Why? Somebody can come in, open the drawer and take it and go away. Right? But I have a very sensible management. Okay, and today let's assume I'm, let's say, tea plantation. I obviously work with a lot of cash. Right? But my management is very good. They have physical verification. They have dual custody. They have a proper cashier. They have keys, register. They have everything. They run it almost like a bank. They have a safe deposit locker, etc. Now, because of all these controls, right, I am able to reduce my risk. We normally don't do this so mathematically, but I'm just giving you an example. Right? Now, what is my residual risk? It is only so much. This is my audit risk in cash. Now, let's assume they have nothing. Then my risk is very high. If my risk is only 0.2, I do only less audit, low audit. But if none of all these are elements of your internal control. If my internal controls are not good, then let's say I have only minus 0.2. My risk is still very high. So what is a control risk? A control risk means a risk that cannot be stopped by a control. So I don't have great controls. So that is the risk that I test in my compliance procedure. But you can forget all that. This is my residual risk. I have to perform more audit. So this is just for you to mathematically appreciate that you have something that's a residual risk, which is what you need to audit needs to handle. Of course, there are other things. There is an inherent risk, a control risk, a detection risk, and then you have your audit risk. So you have your control risk, your inherent risk. I have reduced it because of my controls. So my risk came to 0.2. Then I have very good audit procedures. Okay, I'm like really good, 0.9. My audit procedures are so good. So finally, my risk comes down to only 0.18. So the more my audit procedures are, the lesser is my risk. So this is just an off track kind of thing. Now from here on, for the next maybe 20 minutes, I'll walk you through the various spreadsheets, but I'd just like to take I'd like to just drink some water. I'll join you in 2 minutes. Yeah. Is my presentation continuing to share? Is my presentation visible? Yeah.
Yes, yeah.
So from here on, we go to, categories. I'll explain the logic to you for one or two, and then we can move into the next segment. This is typically how an audit checklist looks. So there's a component. Again, your standards want you to fix responsibility on who's doing the audit. Done by, reviewed by. What are your references? You can write it in great detail. You can ask your, see again, the articles get very excited when you ask them to fill out these things. They fill it up actually really well. Again, the standards permit you to maintain working papers in electronic form, but just take care. There are some nuances on corrections, etc. But I think for a mid-sized firm or a small firm like ours, we should maintain something properly. That's it. So for all these checklists, you will find the assertions. You will find a work paper reference and you will find exceptions. Now, suppose for me, fixed assets is number 9. Or you can just go and give here 9.1, 9.2, 9.3, etc. You can just keep attaching papers behind this. And you can use this whichever. You can remove this and move it to a separate workbook called fixed assets, etc. You can distribute the work very easily. So in all of this, I have tried to incorporate, see, because for an SME client, you can't have a separate ICOFR template. So how do you do an ICOFR template? That's another thing. So how do I do ICOFR for a client? I will say component. I will say process, sub-process. I'll show you an ICOFR template very shortly. So you can't build a separate ICOFR template for a small client, right? So I've tried to embed the main elements of an ICOFR here itself, although the client is supposed to have an ICOFR template. And then you are supposed to test it as an auditor. And the nice thing about this checklist is it is as much relevant for internal audits as it is relevant for statutory audits. For internal audit, you can add a little more proprietary issues, then it becomes a complete internal audit program also. So overall procedures, always you have to tie it to the opening trial balance. Some of our clients will pass some entry after we've signed and then the trial balance will change. Reconcile to the general ledger. Ensure that your tally balance tallies to your fixed asset register. So these are the overall accounting policy. Have you done a useful life review? Disclosures for gross block, depreciation, net block, etc. as per Schedule 3. These are all some of the overall things that you will see every time you have to see. Now, what did I do? I took one component, asset. In asset, what all can happen? First of all, opening balance tallying has to happen. Fixed asset register tallying has to happen. Those are all financial. What all can happen in a process? I can have asset addition. So I will audit additions, deletions, personal revenue expenditure. Last year, I capitalized one big item, a new factory for 20 crores. I have to check it. So it's specific aspects relating to capitalization. Physical verification, very important component of fixed assets. Idle unutilized assets. Asset movements. This is more important for internal audit and internal control because your client must have some system for moving assets from one location to another. Depreciation, very, very big component. All the audit steps on depreciation. Fixed asset register. Revaluation, if any. Now, Companies Act says, in fact, wherever revaluation, next year there is a change in Schedule 3 on this also. More than 10% you have to disclose, and you also have to specifically state that the revaluation has been done by a registered valuer. Who's a registered valuer? Somebody who's registered with IBBI, not this bank empaneled valuer anymore. Title and insurance, again a specific question next year, where title deeds of assets are not held in the name of the company. Please indicate so. So normally people ask, okay, when is the circumstance where a title deed may not be held by the name of the company? I can give you one small example. Your client's company went and bought another company. That other company had land. So the original title deed will be there in the name of the other company only, but you are the 100% owner of this company. And in what is called as the A register or the sub-register record, the mutation will happen. But the original title deeds will not be in your client's name. It's a fair enough situation. But I'll still go and borrow on that, etc., etc. So this is just a small example. Insurance, very important. Special categories of assets. So normally when I do one component, I will do everything related to that component. If I bought EPCG, I will finish off fixed assets, EPCG, contingent liability disclosure, everything will get covered at the same time. Scheme compliance. Similarly, assets on for scientific research, whatever is that income tax provision, you will clear it. Deferred taxation, very important because that depreciation directly impacts your deferred taxation. Capital work in progress. See, in fact, this audit program was written even before the new Schedule 3 came. Ensure all entries in CWIP, they are genuine advances. See, lots of times they get a loan from a bank and then it'll be sitting in CWIP endlessly. You have to check whether that CWIP is there or not there. You review long pending items in CWIP and obtain reasons for the same. Again, you have to be the sixth sense auditor. If it's outstanding for a very long period of time, find out whether it is still there or not at all there. Somebody might have even taken the machinery and removed it. The next two sheets I've actually given, you can check any item your client has done in any day. You can find out. I'll give the latest template up to 2021. I've got it. So you'll be able to capture for both SLM and WDV. I'll share the revised latest thing. Till 2021, you can work out. If your client had bought something on a particular day, how much should the value be in 2021? This is just a simple Excel template. You can prepare it either which way. I had actually prepared it where you would want to create a fixed asset register for your client. See, the formulae are a little complicated, but you can understand, you'll be able to see how the fixed asset register will pan out. Especially if you're keeping on WDV, it's very complicated because you have to depreciate the thing. Again, my humble suggestion to everybody is ask your client to buy a software for fixed assets. Unless it's only 10 lines and you can manage in Excel. I think it's important. Now, at this point, I am not covering fraud risks on any of these items because I think that's a slightly interesting part of the presentation. So I'll walk you through that next. The next is investments. Similarly, with investments, what have I done? Overall procedures, additions and disposals during the year, accretions to investments, bonus issues, rights issues, dividends, disclosure requirements. But this is a common mistake I've seen in a lot of cases. The Schedule 3 is very categoric. It says you must give me the name. Some of us forget to give the names. So if your client has invested any money somewhere, the name of the investee should be shown very clearly under the relevant category: quoted, unquoted, provision for diminution, subsidiary, associate, joint venture, etc., which I'll show when I'm showing my Schedule 3 template. Income from investments, valuation, any other aspects. Similarly, what would I do on inventories? Overall procedures: opening balance of last year should be closing balance of last year to opening balance. Control over receipts, control over issues, inventory custody, inventory ledger review will be very important, inventory write-offs, inventory verification, most important. I will also share along with this presentation a very simple 26-point checklist of what all you must cover in inventory verification. It's just a simple Word document. You can go through and read it. It's called the A to Z of inventory valuation. Your client must issue written stock taking instructions. It is very important. All locations have to be covered. All categories of inventories have to be covered. Everybody has to sign the working paper. They have to take responsibility that the inventory was cited. You must take cutoffs. If your inventory verification is stretching to more than 1 day, lock it and seal it if possible. See, where I did my articles, they were fanatic about these things. They were not bothered whether the client will think wrongly about us. They would just go ahead and do it. Inventory provisions, etc. Similarly, for revenues and receivables, I've got overall procedures, control over masters, order processing, invoicing, dispatch and sales booking, collection accounting, debit and credit notes, balance confirmations, aging of receivables, provision for doubtful debts, review of legal files, trade advances from customers. Most of it is what we actually do. It's just that I happen to put it in an Excel sheet. Cash would be cash receipt, cash payment, cash custody, cash insurance, cash verification, cash presentation and disclosure. So this is what I have covered. Similarly for bank, it will be opening and closing of bank accounts, control over receipts, control over payments. If your client's BRS is not done, please don't leave them. It is a must, because that's your biggest control, that your bank books and your bank statements are indeed reconciled. Similarly for bank, what would you do? Opening, closing of bank accounts, overall procedures, control over receipts, control over payments. I think the bank template has got overwritten, but yeah, bank confirmations, bank reconciliation statements, dormant bank accounts, presentation and disclosure. Similarly, loans and advances, miscellaneous expenses, share capital, reserves and surplus, secured loans, overall. For loans alone, you always prepare a movement schedule. Loan agreements, security creation, approvals, repayments, interest, loans in foreign currency, debentures, any other specific aspects. For everything, you can add one ensure compliance with CARO. You can have a separate checklist. Unsecured loans, current liabilities. So in current liabilities, you will go see, I told you, this is the most important procedure. Test of subsequent payments. Review payments after year end until the date of completion of audit to examine the value of liabilities which have been paid out. This will enable identification of excess liabilities not backed or liabilities which have not been booked at all. Very important. Similarly, provision for taxation, payroll, electricity, rent, other expenses, and I've kept a small TDS checklist. You can supplement it with the GST checklist, a standards and auditing checklist, which I will find and send to the chairman today after the presentation gets over. So this is how you actually build an audit program. It's aligned to the entire process. Now in this, let me just show you one more. I told you I will show you one ICOFER template. See, it's very, very important. See, today you are actually signing the ICOFER. There is an institute guidance note. The management must have a template which you are expected to review. It's actually very, very high common sense. So for example, for purchase of goods and services, you will have various processes, right? This is all is ICOFER. In fact, I have a very significant interest when I'm showing you this template. See, today with COVID coming in, no one is really bothered where you're sitting. They're quite happy to engage with you wherever you're sitting. So it's not uncommon for a chartered accountant in Palakkad to find a client in Chennai today. Some of these ICOFER, etc., could be very good new lines of engagement for us. Process, sub-process, risk, control, process owner, control frequency, and you do the testing. This is how you document an ICOFER, and this is all there is to it, for which you charge about 2-3 lakhs to a client to cover all their risks and to present to the statutory auditors. It's a very, very interesting, it's a new area. Similarly, internal audits will acquire a lot of significance. Now, with this, I have finished the third segment. So we first went into an overview. Then we went into important aspects on Companies Act. The third we came to was the audit checklists, which I will share with you. And this is again I'm only going to take about 10 minutes or 15 minutes on this. This is, in my opinion, the most important thing in our statutory audits this year. It is how do I address fraud risks and what are my red flags? So I strongly implore all of us to look at sixth sense. It's an intuitive faculty that's not explicable in terms of normal perception. So slightly think beyond the ordinary. Why are we doing so much focus on statutory this year? Economic stress, amply evident. MCA has struck off some 5 lakh companies which have gone off. You know what? Next year's Schedule 3, they are saying, if your company has any relationship with the strike-off company, please put it out. So today, when you are reviewing debtors, you must check if there is any debtor who is a strike-off company. In which case, 100% you need to take a provision for it. Please be very, very careful. Usage of corporate vehicle as shell companies. Many times your client comes and says, madam, nothing in the balance sheet, madam. Then there is one 20 crore asset, 20 crore liability. Why, madam, you're asking for? These dormant companies and shell companies are very, very high risks, because what is happening is when the larger companies are failing, they find that all these companies have been used as conduits. So please be very careful. OTS and IBC. IBC hitting in a big way. Everybody is now waking up and saying, where is the financial statement? NAFRA's view on audit. See, currently NAFRA doesn't touch most of us, but NAFRA saying something on how an audit needs to be performed could well become the law of the day. So one has to be a little careful. Very interesting. Forget the smaller companies, but look at what is happening in this country. They bring something as applicable for big companies, and then slowly they make it applicable for everybody. They bring something as applicable for large audit firms, and then they bring it for everybody. I'm not seeing beneficial carve-outs happening in a big way. So today, very interestingly, SEBI came up with something. They said, if any listed company, by whatever name, it was a change in the LODR. They said, if you appoint somebody as a forensic investigative, whatever audit, Please tell us who you're appointing and give us a report later. I think it is a brilliant move. Of course, everything in this country everything in the universe can get gamed. But having said that, one of the fundamental questions I asked myself is, why did RBI not insist on this for banks? Today, when there is an account failure, they're asking, okay, what is a chartered accountant doing? I can virtually turn back. And if only, now there is a very clear rule. Most banks, if the account exposure is more than so much money and it becomes an NPA, 10 crores, 20 crores, 50 crores, they're supposed to do a forensic audit. What is happening to those reports today? RBI might start reviewing. So in that, the automatic question is, as statutory auditor, you never asked for confirmation of balance. I mean, how would we even remember? So I'm just saying, take an additional safeguard. Perception of an auditor. This is what I told you. Today, are you auditing for yourself? No. Unfortunately, when you're auditing for a stakeholder perceiving you determines what you are as a profession. Regardless of how much good work we do, we need to just scale up there. So you have 143.12, which is fraud reporting, ICOFER, new CARO, new Schedule 3. See, again, when you're reporting year on year, next year, you can't report something drastically different from what it has been this year. No, it doesn't look correct. Especially if there is a fundamental defect this year itself. So try and understand the new Schedule 3. I think it's anyway going to come. Whether it's next year or not is a different issue, but it will be transformational. And the way I see it is, if you take 143, audit report, 143.12, P&L, balance sheet, cash flow, Schedule 3, CARO, notes on accounts, and ICOFER, there is not a single question that is not asked by the government on the financial statements. In fact, a lot of people felt, no, why are they doing this to Schedule 3? I said, I'm very happy. Because previously, if I tell my client you are using your end use is not proper, he turns back to me and says, why are you asking me this question? Are they asking you to report? Today, you can tell him, yes. In CARO, there is a new clause. It says, have bank loans been utilized for the purposes for which they have been obtained? If not, please report. So you can tell your client, see, there is a specific question there. I feel these changes have actually fortified a statutory auditor. Please use them to our advantage. See, again, there are two things. Our client has a choice. He can be a sole proprietorship, he can be a partnership, he can be an LLP, an AOP, an unincorporated joint venture, anything. If he chooses to be a company, he must respect Companies Act and its reporting. Similarly, as an auditor, I have a choice. I can be a statutory auditor or may choose not to be a statutory. But if you're a statutory auditor, it is better to be a skeptical auditor than a trusting auditor. Just be a little careful on this part. Because another thing I find is, no client stands up for us when there is a problem tomorrow. It's not that he comes and says, no, it was all right. So it's each man then becomes for himself. And as I told you before, I have in my life not come across a single compromised chartered account. They might have been very soft, very sweet people, and they might have missed something. So this is the guidance note on fraud reporting. Just be aware. It excludes kickbacks, stolen passwords, and parallel businesses. Similarly, I'm very scared about this part. You don't need conclusive evidence. Reason to believe is the criteria. So if you have reason to believe, then your fraud reporting gets kicked off. Now let's just take 10 minutes on opening our eyes to some fraudulent transactions. I will leave this presentation for a more detailed reading. I will possibly highlight only one or two issues in every component. Share capital. Share capital never came in, but a bank loan was given. They just showed a book entry. Share stated as allotted for cash, but cash not received. Your very shareholder has been struck off. I have actually seen cases like this. Two shareholders. One shareholder is a strike-off company. then I have a legal crisis, right? An existence crisis, because a company must have two shareholders, correct? So these are some issues in share capital. Secured loans. The company says, I've taken a secured loan from my brother-in-law, but money has not come at all. Some vague book entry, JV, they keep passing. Now, where do you connect this? If your client is part of a larger group, many companies incorporated in the same place, you could have this problem. Similarly, there's an SBI loan. Without telling SBI, your client goes and pledges the property to somebody else without a lender consent. It could be a problem. These are all actual instances of fraud. A secured loan, an unsecured loan suddenly becomes a secured loan and he gives the security to his brother-in-law. New loan has come. Similarly, for unsecured loans, money has not come, but I've recorded a loan. Just a simple book entry. Or even look at a circumstance like this. My client gets 80 crores on one day. The next day, the 80 crores has gone out. I have actually seen financial statements where this 80 is not there on the left side of the balance sheet, nor on the right side of the balance sheet. The company was just a conduit for this transaction. In this case, ideally, the 80 should have come in the left and should have gone on the right. Purchases and current liabilities, fictitious purchases, just to, sort of understate profits. More importantly, today, large amount of LC frauds. I take a letter of credit saying I'm going to buy something, but I never bought anything. So the bank gets impaired. Transactions, overpayment for purchases, fictitious purchases from related parties. I have come across cases of entities where the sales was inflated, purchases was inflated, bank receipt was inflated, bank payment was inflated. It's possible. It happens. Now, similarly, if your client has stopped filing his GST returns, I would be a little more worried. Fixed assets. See, and in some of these cases, I think you should just go ahead, bite the bullet, and just get on without working with the client. It's still good enough. Fixed assets, sale and leaseback transactions, assets used for personal purposes, undervalued sale of assets, especially if they are doing badly. Similarly, my client got money from a bank, 50 crores as a term loan or something, or even 5 crores. He goes and puts it in one SPV. Share capital of that SPV is 1 crore. We have given share premium of 4 crores. Of course, today there is an income tax deterrent because share premium in a closely held company is subject to tax. So it's not likely to happen, but please keep your eyes open. Similarly, I don't know whether there is a unique Kerala context. If any of your clients have opened SPVs abroad and moved money abroad, look for FEMA compliances. Where did the money go? Is my client only being used to route funds? Some of these are becoming a little important. Investment. See, in many cases, especially old. See, again, today, as a statutory auditor, you are talking about financial statements as at a particular date. So let's look at investments. My client says I've gone and put money in some company. Please check whether that investee company even exists today or he's got struck off in that 5 lakh washout that happened with MCA, becoming very important. Similarly, your client says I have put in money in that company, I am an investor. Check with your client whether he's even receiving the AGM notice from that company. Many cases where there are fraudulent dilutions and your client may be thinking I am a 90% shareholder, he will actually be a 10% shareholder. And for all these cases, please obtain confirmation of balances. Similarly, inventories, it's the most compromisable item. So please ensure that there is a proper verification and evaluation. And it has to be in accordance with the standard. Receivables. Now, again, suddenly your client says, I'm writing off 15 crores of inventory. You as an auditor can't just say, yes, correct, he's writing off his inventory. I am comfortable because the financials are true and fair. No. The banker's interest is involved there. Why? Because that inventory was the underlying security for a bank loan. Please be very careful. Similarly, on receivables, large write-off of receivable. Actually, my working capital facility is secured by my book stock and receivables. Please check why it's getting written off. The banker is losing his security. He will come to argue tomorrow. Advances, very, very important. Your client has borrowed money from a bank. Why should he give an advance to somebody which is free of interest? Just doesn't make sense, right? Let it open our eyes. Please review those transactions and qualify them as appropriate. Similarly, P&L. So some of these are just my opening kind of views on this particular aspect. So with this, I'm concluding the third part of my presentation, and come to the last part where we'll be going through a little bit of Excel as well. Yes. So I'm actually going to show you a schedule 3 and how to prepare it. So before I go through this, let me just explain to you the Excel formulae that I'm going to be using. It's only 3 formulae. It is actually sum if, and it's actually only 2 that way. So and maybe a VLOOKUP. I don't know how many are not familiar. So let's first look at sum. Sum is nothing but 1, 2, 3, 4, 5 is equal to sum. You're just summing it. Some of us may use the sigma function, which I'm sure you've done. So this is the sum formula. The next is VLOOKUP. VLOOKUP is very useful because the headings in your trial balance don't change, only the numbers may change. So where the headings are the same, you can pull in the new numbers by a VLOOKUP. But I'll leave that to you. Alternately, you can copy paste this, but some of these templates, you're slightly senior and you're not really clued, you just give it to your article assistant. They will understand effortlessly how it's done because they would have learned all this in the formal ITT process. What is VLOOKUP? There is these are the names of the students. Or let's say this is my old trial balance. This is a trial balance that I generated on 30/6/2021. The amounts were 100, 200, 300, 400, 500. Now, today I generated a new trial balance, which is 19/7. Now, all my work in this spreadsheet, I have done it based on this trial balance. Let's say the old trial balance, this trial balance. Now, I want to change these numbers to the new numbers, which are there in my, this is my old TB, and this is my new TB. I want to bring the new numbers. So I do is equal to VLOOKUP, which is the item you want to look up A. Where do you want to look it up? In the new TB sheet. Where do you want to look it up? I want to look it up in this column. Either you can select the whole column or you can select only the range. But when you select the range, you're supposed to block the range. These most of you would be familiar. And if after the lookup, the number is there, please bring it here. So let me do one thing, the new TB, so that we understand how the numbers have come in. I will multiply by one additional 0. This is my new trial balance. My old expense was 100 rupees. My new expense is 1000 rupees, which is there in a separate sheet, but I managed to bring it here. So this is the syntax, is equal to VLOOKUP, opening bracket. What do you want to look up? I want to look up A. I want to look up A. That is new TB C9. What is B3? I want to look up B3. What is this? This is B3. Where do you want to look it up? In new trial balance C to D. This segment. And if it is there, give me the second column. I want to look up A from there to A here and give me the second column. So it returns this number to me. Now what happens? I had one more line in my trial balance. It will say not available. Why? Because F is not there in the new trial balance. Similarly, I have G here. It will never get looked up here. So this is the second formulae that I wanted to teach you in brief, which is actually the VLOOKUP. If somebody wants to do only VLOOKUP separately, you can do it separately. The third is the most interesting and the most relevant formula for this. Because every time you can come and very simply paste your TB here. The third formula is called SUMIF. Let me give you a small illustration. There are 3 students. There are 3 classes. Class 10, there is, there is class 10, class 11, this is the fee received by a school on a particular day. Class 11, class 12. These are the various students, roll number 1, 2, 3, 4, etc. Right? Now we received fees from everybody, 1000, 2000, 3000. Let's say some combination of fees was received. Now this is the fees. Now I use a simple formula called SUMIF. Now somebody is asking you a question. Can you tell me how much is the fees for class 10 alone? How will I find it out? I will go here and say is equal to sum. Then I will go here and say is equal to sum. Then I will go here and say is equal to sum. This is one way of finding the sum, correct? Of class 10. But I can use something called as a SUMIF formula. So I can go here. Class 10, class 11, class 12. I can tell the computer is equal to SUMIF, open bracket, this range. If it is 10, then please sum the fee column. Got it? SUMIF, this range is class 10, then please sum the amount column. What's the biggest advantage of this? If I just copy paste this formula, 11 standard will come. If I copy paste this formula, 12 standard will come. So what's the only change that happens here? The change that happens here is heading Schedule 3. This is the trial balance account. My trial balance account is electricity charges, generator charges, electricity in unit number 2, electricity charges in factory. Electricity in factory. All these I group as electricity in my Schedule 3. And then I tell the computer, can you sum electricity? It gives you. So all I've done is I have substituted the student name and the class to a trial balance account and a schedule account. So this is the logic of the sum if formula. Now, if you give this to any of your article assistants, or if you are familiar with Excel, you'd be able to crack this very easily. So what have I done here? I have given one illustration. See, I've taken a full trial balance. So first let's understand. So that's your sum if formula. This is your format of a balance sheet. This is where the names get defined. Share capital, reserves and surplus, money received against share warrants. This is the same name which should be there in your trial balance. Reserves and surplus is the Schedule 3 grouping heading. Whatever is there, the same name you put it, and you can do a simple sum if by this number. This is actually an experiential spreadsheet. Once you see the spreadsheet and start playing with it, you'll be able to figure this out very easily. So first of all, I construct a Schedule 3 with all its headings: share capital, non-current liabilities, current liabilities, others, current assets, etc. Always, I have done only the balance sheet. I have not done the P&L. Your balance sheet should always be linked to the schedules. Long-term borrowings should be in the schedules. Everything is first linked to the schedule. Now the schedule gets linked to a trial balance. How do I do that? First, I get only this column, correct? This is how my trial balance will look, right? My account head, my debit, and my credit. So I've taken a very simple 67-line mock trial balance. Now to this trial balance, I went and gave the grouping. Capital account should come in share capital. Security premium will come in reserves. This is all secured loan. This is all short-term borrowing, trade payable, other current liability. All this I give. So I know where it is going to get finally sitting in my balance sheet. Then what did I do? I have my entire schedules constructed, correct? This is how my schedule should look. This is very interesting because I have given you what all it is supposed to contain. If there is reserves and surplus, the Schedule 3 requires you to give securities premium, P&L, capital reserve, capital redemption reserve, securities premium, debenture redemption reserve, revaluation reserves, etc. Similarly, long-term loans. See, long-term borrowings, I have given for my client what I thought only this. But all the long-term borrowing disclosures as per Schedule 3 is nothing but what is here plus what is here. Term loans from banks, loans and advances from related parties, other loans and advances, deferred payment liabilities, bonds, term loans, etc. Now let us take one example. So I went to my trial balance, right? Long-term borrowings. Term loans from banks. So when I go here, so just see what happened. You had two term loans. What did I do? exactly the way I have written in the schedule. I copy this, I bring it to my trial balance, I paste it here. So each item of the trial balance, I will identify the schedule 3 description. The moment I do this, if you go to schedule 3, it used the same SUMIF formula. What was the SUMIF formula? SUMIF. The word term loans from banks features in the trial balance in this column. If it is there, then please sum for me the net column. That's all I did. Now you can ask me one question. If I change this to term loans from banks full stop, what will happen? It will go away. So the only important control in this is this part you should fix. In fact, what you should ideally do is you should prepare a schedule, one schedule 3 schedule for all clients put together. Later on, if there is no deposit, obviously that amount will be 0 here. So you can then delete those rows. That is the easiest way to do this. But this is just for the sake of understanding that I actually wanted to show you this. So this is how you prepare. Now I told 3 formulae, right? One was a formula that all of us know, which is called as the sum. But today when you do it in this format, you have a debit, credit. You have a net. But when I take it to my balance sheet, I cannot take minus, right? So I will convert all my net into absolute value. That's all you need to know. In fact, I will take my trial balance. My net is nothing but debit minus credit. I run through this. What will happen? The total of my trial balance will be 0. Now I will just use the formula is equal to ABS, which is absolute value. I run my absolute value down. It will be double my trial balance, correct? Because debit is also sitting as positive, credit is also sitting as positive. This amount is what I take to my schedules using the SUMIF formula. So that's the utilization of 3 formulae. We look up if necessary, sum, SUMIF, and absolute values. So with this, you'd be able to conclude this entire thing. See, because I wanted to keep this presentation simple, I have only done 67 lines, only a balance sheet. But you can take your real trial balance and try doing this and it'll just work beautifully. It's so simple. And the best test is, if you have not done the pull in correctly, your trial balance sheet will not tally. Correct? Because this absolute value which you are carrying of 24.28 crores has to go half in assets and half in liabilities. So then you will know which schedule you've not mapped properly. You can take it forward from there. This is only one way of doing it. Others use VLOOKUPs, etc., etc. You can use pivot tables, but this I thought was the simplest way to do it. So with this, I'll just walk you through the various components. These are all, so I've given this more like a ready reckoner. Short-term borrowings should include this plus all this. Trade payables. Very simple. Sundry creditors, MSME, non-MSME. That's how they want you to disclose. Other current liabilities. Short-term provisions. Whatever you have to disclose, which is there in the actual Schedule 3 of MCA, I've tried and brought it here. So I've done this for P&L also, but just kept a template. That's about it. So with this, I'd like to conclude the operative part of my presentation. So we've been through 4 distinct parts. What statutory audits are all about. 2, what are the checklists and audit programs just for statutory audits. 3, what are the most important aspects of statutory audits in the current year. 4 is your fraud risks. And 5 is this, and I'm very happy to leave the presentations behind. So if there are any questions, I'll try and answer them to the best of my capability. So there's one question: should internal auditor seek consent from the previous auditor? No, sir. It's only for statutory audits. But as a matter of professional courtesy, if you want to do it, you can do it. To the best of my knowledge, it's only for statutory audits.
Yeah, ma'am.
Yes, sir.
Yeah. Through. You're through, ma'am. We can take up the questions.
Yes, sir. There's one more question. Please name litigation search engine. It's not a litigation search engine, sir. It's a general search engine. So there are many which are available. One is called Insta Financials. So I have obtained, they have detailed reports, they have summary reports, etc. The price ranges from 1,000 to 2,000 or something like that. I have also used something called Toffler. Then I've used something called Zauba. I've also used something called Probe. So these are the 4 that I've used in the past, and they're all equally the same. So you just have to go and Google for these. You can apply, you will get everything. You will get all the MCA data, plus you will also get a report.
One more question. It is that you have already read that.
The Excel discussed relates to small company only. No, Sony. The Excel can be used for anybody. You just have to modify the templates. But for a large or a listed company, I may not have covered all the elements, but the principles of audit are the same. You can use it. You can use it for any company, actually. You can add more lines.
Now, no more questions. Dear members, any other questions, please type in Q&A or you raise the hand so that we can unmute you for asking the questions.
Thank you, sir. Thanks, Sony, sir.
Yeah, I think no more questions. Nobody's. So, any other closing remarks, ma'am? Otherwise, we will.
Yes, sir. None, sir. So, thank you very much for this opportunity once again. And
thank you.
If any of you ever come to Chennai, you can drop by for a coffee.
Sure, man. Thank you. Thanks for your invitation. We all see it's only because of this pandemic problem. Otherwise, at least you would have met 1 or 2 times any other programs, regional programs, or so everything held up now. But at least we can meet through this mode. That's very happy that you are accepted our invitation, and that's great. Yeah. So let me complete my responsibility of proposing vote of thanks as well. Our respected Chairman of Kottayam Branch, CA Prashant Srinivasan sir, Chairman of Palakkad Branch, CA Vinoj B. Menon sir, Past Central Council Member and Speaker of the Day, CA SRIPRIYA KUMAR, Committee members of Palakkad, Kottayam and Thrissur branches, senior members and other fellow members. Once again, good afternoon. Our speaker has presented a wonderful session on the topic Company Audit 2021. Giving special attention to small and medium enterprises with detailed audit report, how auditing, how to complete, and templates of financials, Schedule 3 financials. And she has come up with even formulas to easy our work and saving our time by if any changes happens. See, in audit, sometimes initial first cut financials may change due to after passing certain audit entries and everything. So without affecting our financials or its correctness, if you correct in one place, it will get automatically corrected in other all places. That's great, ma'am. It's a really very good template for all of us. That Detailed explanation is given about the report template, and carefully some checklists has also been provided, and also reminded us about the requirement of the checklists to ensure that we have covered all the areas of our audit, especially some of the caution areas, acceptance of deposits, disqualification of directors, and other relevant areas, which is very great, ma'am. Let me thank our speakers here, SRIPRIYA Kumar, for this wonderful presentation and questions on this audit of companies for the year 2021. Thank you, ma'am.
Thank you, sir. Thanks very much.
Now, Kottayam Branch Chairman C.A. Prashant Srinivasan, sir, for welcoming the members and the speaker of the day. Palakkad Chairman for introducing the speaker of the day, and all the managing committee members of the 3 branches. And the most relevant and members who have attended this seminar, good participation members, those who has joined through Zoom as well as through YouTube, that viewed all the. Thank you. It shows that the subject is very relevant, and we are all expecting good experienced words from the speaker as well. Thank you. Thanks.
One member, Mr. Devdas, has raised his hand, sir. So I don't know whether.
Just a minute. Yeah. 1 second. Let me see that one. Who was, ma'am?
It was Mr. Devdas. I think I allowed him, but maybe it's just a.
Yeah, by mistake. It's, I think no other.
Sure.
Thank you, ma'am.
Thank you very much. Thanks so much for this opportunity.
We'll meet once all the conditions are okay and everything. Thank you.
Thank you, sir.